Hello and good morning. We're just going to give it 1 minute for a bunch of people who are just jumping on now, and we will begin just in 1 minute. Welcome, welcome. See everybody jumping in. Okay, so while we're waiting for everyone to join in, just a quick housekeeping. If you've got any questions, please can you pop them into the Q&A section at the bottom of your screen. We will try and get to them by the end of the session. And obviously, if we don't get a chance to, we will follow up with you after the event itself. Right, let's get going. A very warm welcome to everybody. Thank you for joining us for another session of ZeroeINLIVE. My name is Lauren Haworth, and I am the head of marketing at Zeroe. Now, the ZeroeINLIVE webinar series is about one thing, and that's clarity. We're here to cut through the noise and sustainability to bring transparency on how data, technology, and regulation are really reshaping this field. Each episode is designed to educate, to give you visibility into the shifts that matter, and to make sure that you walk away with practical insight, not just theory. So let's get into the agenda. This is going to be split into 3 sections. I'm going to do the first section, which basically covers what's wrong with sustainability and ESG reporting today. We're going to look at a couple of case studies and why it's been so easy to keep the narrative going without the data. Then I'm going to hand over to my wonderful colleague, Cecep, who's going to go through what verification actually requires. Cecep is a sustainability manager. He's been on the ground. He's done all of the reporting, and he knows what they're looking for. And then we've got a special treat for you guys today. We've got Farouk, who's our founder and CEO. He's going to be doing kind of a mini demo of the platform that's going to show you what a system is capable of today. So we're going to look at some technology. Right, let's jump right in. I always like to start off some segments with looking at some case studies that gives you a really good demonstration of what things are happening around the world in this space. Now, if we go back to 2015, some of you might remember what was called Dieselgate. And basically, it was the Volkswagen scandal that represents probably one of the most shocking examples of systemic deception in ESG reporting. Basically, what they did was a type of software manipulation. So VW installed devices that could detect emissions testing and lower emissions during those tests while allowing it to be 40 times higher during normal driving. Now, that scandal had affected millions of vehicles globally, and it actually led to one of the largest ESG-related penalties in history. And essentially what they've been doing is they've been marketing these vehicles as environmentally friendly while knowingly being deceptive with regulators and consumers. This case subsequently led to criminal charges, there were executive resignations, and it was massive reputational damage. And obviously, with a ticket like $34 billion in fines and settlements, that's a pretty scary number. This comes to a little bit more recent. In 2021, Toyota, up until that point, was also an enormous penalty that was imposed for violating the Environmental Protection Agency's emission reporting requirements. They were fined $180 million in 2021. Essentially, what they had done is they delayed the reporting of 78 emissions-related reports, and some of them were filed 8 years late. They also failed to share over 200 quarterly updates on emissions recalls between 2005 and 2015. Now, the delays led and allowed Toyota to continue to profit off the vehicle sales while they were concealing the emissions problems. And then obviously subsequently in 2023, Toyota faced an additional scrutiny in Australia for also potentially overstating emissions reductions. So let's come to a newer one, which you might recognize. DWS. DWS is 81% owned by Deutsche Bank, and it basically manages around €1 trillion in assets. Essentially what happened between 2020 and 2023, they were aggressively marketing their products as having strong ESG characteristics, claiming to be a leader in sustainability. Then in 2021, their head of sustainability at the time became a whistleblower. where she stepped forward to say the ESG integrations were overstated. So investigation started the German prosecutors and in the US. So by the time 2023 rolled around, the SEC fined DWS $25 million for misstatements about ESG investments and anti-money laundering violations. Now, just to be clear, out of the $25 million, 19 million was for the ESG investment misstatements, and the other 6 was for the AML. So that was a really large ticket. Then to add insult to injury, by 2035, in fact, April of this year, the German prosecutors concluded their investigation and imposed a further 25 million euro penalty. Now, catch this. They stated that the size of the fine was calculated based on the total revenue generated by DWS's parent company, Deutsche Bank. And that obviously made a lot of holding companies really nervous in understanding that all your subsidiaries, what they do and what they don't do, has major implications for the holding companies themselves. And I thought it was quite an interesting comment that was made by DWS in saying, in recent years, we have already publicly acknowledged that our marketing was sometimes exuberant. I think that's quite an understatement. Right, and moving on, the purpose of this particular slide is just to demonstrate the sheer scale. There were actually so many examples, I couldn't fit them onto one slide, but what I thought was really interesting was pre-2020, as you'll see at the top, there were a fair amount of landmark cases that were going on. A lot of it was more kind of scandals that were coming out. There were some large ticket items where there were fines and penalties. But what I noticed, and what you will as well, is in the last 5 years, though, there has been way more enforcement, and a lot of that has been financial. And we'll get into some of that now. I suppose also just leaning back into a former webinar that Farouk had mentioned, in 2024, 46% of the FTSE 100 companies publicly revised or restated their climate data. And the devil in that data was it was scope 1 and 2 emissions. Now, those are not small adjustments. When companies issue sustainability reports with incomplete or inaccurate data, especially in the first year of disclosure, they risk way more than just regulatory penalties. We're talking about undermining internal trust and credibility with stakeholders. So there are large implications. Now, you might be saying, okay, so how did we even get here? Why was greenwashing and deception so easy to get away with? There are a couple of reasons. And to a certain degree, we are not entirely out of all of this. So let's just start off with the era of voluntary disclosure. To a certain degree, this still exists in a lot of places around the world, but there are some changes happening. So let's just look at what that was about. So ESG reporting was completely optional. Companies could choose if they wanted to report, what they wanted to report, and how they wanted to report. There were no universal standards, unlike GAAP or IFRS for financials. There was no mandatory assurance. So ESG reports were self-published, self-graded, and self-policed. And until very recently, no regulator had the authority, or perhaps even the will, to impose penalties for false claims. Then we look at some materiality manipulation. When there are no clear rules, companies can spotlight small green wins while ignoring their bigger impacts. Also, scope boundaries can be drawn to exclude messy and inconvenient data. And then baselines could also be gamed to make progress appear faster than what was in reality. Then we're going to move down to framework fragmentation. There were hundreds of competing frameworks with no global alignment. Don't get me wrong, there are still a lot of frameworks that are competing, but there is a little bit more alignment now. Additionally, companies could what was called framework shop. So essentially, they could pick whatever made them look best and what worked for their information. And there was also overlapping and inconsistent metrics, which created room for, again, cherry picking and selective reporting. Then we came to the situation where why regulators didn't act. Reality was ESG wasn't seen as financially material in the last 40 years. And jurisdictional fragmentation meant that global oversight was almost impossible. And then very lastly, there was a major technology gap. So data collection was, and mostly still is, manual. and you're dealing with a lot of spreadsheets. There's no systemic tracking, which means there can be major mistakes made and duplication of efforts. Anybody who's ever used Excel will understand you can skip a row, and by doing that, you can make a major mistake. And that is the reality with any kind of data collection. That has been the problem prior to, and that is a problem that a lot of companies are still dealing with at the moment. And we'll get into some of that detail as well. Second to that, supply chain and scope 3 data has been and still is to a certain degree very prohibitively difficult to gather. And then very lastly, we've got verification tools like blockchain traceability, satellite monitoring, AI classification either didn't exist or it wasn't able to scale. So I mean, the reality is ESG has not been a priority. There hasn't been major enforcement. There were no common standards. And companies basically just did the bare minimum to tick a box up until this point. So now we sit in a position in 2025, what has changed? From a regulatory perspective, in the broader sense, changes have been sweeping and severe. We've got mandatory rules are here, CSRD, SEC climate rules, ISSB standards, etc. Governments have mandated lots of different changes, and that is going to have a waterfall effect. Second to that, penalties are real. We've seen in some of the case studies demonstrated before, fines in the millions or billions, executive bans, court-ordered business changes. The penalties and the sticks are quite severe. One of the other things that's changed, which is particularly important, especially for people who are just starting their journey in this space, in terms of verification. Limited assurance is what is prevalent now, but we are migrating towards reasonable assurance. And let me give you the differentiator. Limited assurance is a baseline verification. There's low rigor. The auditor concludes that there's no evidence of material misstatement, but they do not give a positive declaration of accuracy. This is generally a more cost-effective way of doing things, and is common for first-time or voluntary ESG reporting. However, we are moving to a space where there is reasonable assurance, and this is the highest practical level. It's akin to traditional financial audits. They've got in-depth verification, and a positive declaration from the auditor on accuracy is required. So quite significant changes happening in terms of the regulatory space. Then we also look at keeping on a broader level from a company perspective. Sustainability data is now driving real decision making. So you've got this data that is now determining procurement contracts, facility performance upgrades, capital investment planning, supplier evaluation and onboarding. Now, if the underlying data is wrong or it is unverifiable, the decisions and the consequences of those decisions can be long-term and incredibly costly. And I suppose we've got to lean into as well, we've got regulatory changes, we've got the stakes have changed, but some key challenges still remain. So research has shown us that about 60 to 80% of core ESG data is the same across different frameworks and standards. And you'll see the percentage of overlap demonstrated in this graph. TCFD and ISSB, and 95% of the data that they collect are the same. Now, up to 90% of that alignment is either climate or environmental data. And there's something really important to consider here. On one hand, we've got lots of different frameworks that are all requiring the same kind of data. On the other hand, the different framework and standard definitions, materiality, industry rules, and boundaries are all slightly different, which means teams are doing a lot of repetitive work. In other words, you get a situation where a team will do all the data gathering and present information in a structure, in a format that is required for framework X. Once that's done, then they need to go do the same process again for framework Y. And they land up, if you are a company that has to do a number of different disclosures, perhaps internal and external, the amount of repetitive work becomes exceptional. In fact, they've found that about 30 to 40% of data collection efforts are duplicated, which, you know, if you're running the numbers for a company, you know, is an enormous waste of resources, time, and cost. And then if we have a look at, it's not all doom and gloom, I promise. There is an opportunity in all of this. So regulations are changing, pretty severely and pretty quickly as well. And there's obviously a waterfall effect in that process. Then you've got the case of companies are now relying on the data even more to make some really, really key decisions. But the problem is that a lot of the actual effort behind sustainability reporting and gathering of data, that has not changed as quickly. But there are some advancements that have come into the fore, which is key to obviously where Zeroe is sitting, the opportunities that technology has advanced to such a degree that there is a way to use one system to collect all the data required for all of the reports. And once that data is collected once, then you can output all those reports in whatever format you require. Now, I'm not going to go too much into that detail because that's far too exciting to talk about. But essentially, setting the scene, there's been a major system shift, and you do not have to do it the old way. There are technologies that are live today, like Zeroe, that are going to be able to change the face of it. So with that, I'm going to leave this over to Cecep. Cecep is a sustainability manager. He's been on the ground. He knows the pain of data collection. He's also worked with verifiers. He also knows what they are looking for. Cecep, it's over to you.
Thank you, Lauren. So hi, everyone. So I guess like on my section, I'll be talking more about like what verification actually looks like, the steps in general. I used to work for companies, for a consulting firm, and also for quite some time, for a few months as an auditor in one of the verification company. So basically, like when it comes to like verification, in general, they all require the same thing. They generally asking you the question of like, how did you get your numbers? Who are approving them and how were they being calculated? And depending on like which country that you are in, and depending on like which compliance that you are trying to follow through, it may be slightly different, but overall the underlying data that builds up into the certification process is all the same thing. Well, we know that CDP has its own kind of like long questionnaire requiring you to answer like 50, 100, 200, 300 questions, like to fulfill kind of like their process. And also like when you try to do like your GHG accounting and you try to follow the ISO 14064 for your verification process, they all have different kind of way to kind of like verify whether your data is correct or not. But essentially, verification sometimes you've seen verification as well. Oh, I need to do this verification because this is the only way that my numbers, that my sustainability reporting or my GHG inventory going to be kind of like respected by people out there. But essentially, yes, that is correct. But there's a lot of things that going on within the verification process. It takes a lot of time in verification process, and I will tell you why it takes like a lot of times. And generally, like in verification, you will need, yeah, the fastest you can get verification finished maybe like in around 3 months. And most cases, it could take up to 6 months, depending on the size of your organization and also like the data that you are kind of like preparing for your verification process. And when it comes to like the verification, generally there is only like 2 stages of verifications. The first one is the document review, and the second one is the on-site verification. So let's say you finish your financial year and you already done all of your kind of like GHG inventory as well as like ESG data management and like producing your sustainability report for whatever purposes that you are using them. Maybe you are a publicly listed company that requires to do like sustainability reporting, or maybe you are also kind of like have to adhere to some kind of like reporting requirement, TCFD, ISSB, or whatever it is. If you go to like verification company, for example, maybe like whatever out there, Bureau Veritas, TUVs, or various other local verification company, the process is always the same because they adhere to certain standard of verification. First, you will have like your document review. And in this document review, generally the verificator will see like the completeness of your data. They will look whether you have all of the required data for the verification that you wish to have. For example, based on ISO 14064, maybe it's only related to scope 1 and scope 2, and they will see whether you have all of the requirements for the verification to start. And you will have kind of like you will be kind of like reviewed by the auditor, and they will say, oh, it's a good that you can go to the next step, which is the on-site verification. Or if there is something wrong, this is your chance to make sure that you have all of your data lined up, all of your information lined up, all of your evidence of the data that builds up kind of like your inventory kind of lineup. So this is the only chance you have before the verificator will kind of like directly verify on site and like give you their opinion related to like your GHG inventory or your sustainability reporting. Because like the idea behind why generally verificator only give like a chance to for company to correcting their documentation here is that they want to generally there's like a lot of kind of like mistake when it comes to like document preparations in the auditing and verification of GHG inventory or like sustainability reporting. So it's still acceptable, and they will kind of like give you an advice on how to prepare your file, how to prepare your documentation, so everything lines up for the on-site verification. But when you already like go into the next stage, you're already saying, oh, we are ready for the on-site verification, all the document lines up, all of your corrective action has been done. You no longer have a chance to fix anything. So once you kind of like declare that you're ready for on-site verification, then the auditor will just assess, oh, okay, they will check every single line of data, they will check the methodology that you're using, they will check emission factor if it's like verifications, and then they will give you like an opinion. Like Lauren mentioned earlier, before 2020, the assurance and verification mostly only touch upon the like limited assurance. So maybe the benchmark is like still quite wide. You can still do a lot of mistake, and you will still kind of like pass the verification stage. But I think now based on like all of the regulation that demands like higher accuracy, reasonable assurance becoming like kind of like a norm on its, which saying that you cannot create a mistake in your data anymore, and you have to really know up to like super granular into your kind of like activity data that you know where every single line of data is coming from. And when it comes to like what actually gets verified, for example, in emission data, generally auditor will ask, oh, okay, you have like scope 1, it's like a mobile combustion or maybe stationary combustion. What are the sources? Or are you using generator in your manufacturing plant? Or are you using like company car? Can we see your fuel report? Can we see your fuel receipt? If you don't have fleet management system, like what is the source of your data? It's really important that you know where every single number in your report coming from, up to every step of the process that you go into like producing like that number. Let's say you have a mobile combustion emission of like 100 ton, then the auditor will generally ask, oh, can we see the source of data, and can you explain to us like how you come into like this conclusion, how you manage your data, how you classify your data, what is emission factor that you apply to this data that you have, and what kind of methodology that applies to this specific number that you produce. They will scrutinize such question, and if you're not ready, if your documentation are not lined up, if you don't have like a system in place to help you with all of these problems, then in most cases, you probably will fail the verification, and it will still cost you money, like $20,000, $30,000, and the money will be just poof because like you're not ready with your verification process. And when it comes to like kind of like documentation, they will also ask, for example, how you manage your inventory procedure, how you manage your kind of like environmental data. Maybe there will also be some question related to ISO 14001 about the environmental management system or something like that, because everything is kind of like ties up together. Because like if you don't have like good data management, if you don't have a system that will kind of like help you or guide you in the verification process, the verification can be like a really long, tedious, and like hard process that you have to endure every year. Maybe like it will eat like a quarter of your time every year, and I think that's not really an ideal things to spend your time in. And yeah, verification is not about the number, it's about the proof. Like they don't really care whether your number is high or whether your number is small. You just have to prove that what you are presenting is the correct amount that you are actually like consuming, something like that. And proof comes from structures. You will have like correct numbers if you have like a structures that support your output. And okay, this is what I already like explained earlier as well. So verifier will look at kind of like they will kind of like maps out what kind of things that they will ask more about. Definitely they are not going to ask like every single line of data. If you have like 1 million lines of data that builds up into your kind of like GH inventory, they will see kind of like the some kind of, oh, maybe this is like a small chance that they will do wrong or something like that. And it could be like quite random on what things that they will ask to you about. Maybe they will ask like, oh, why there's like this car that you have in one of your remote locations that are consuming like more than what you have in your headquarters. They will ask such question. They will ask about methodology as well. For example, oh, you have like the data for detailed data of fuel for all of your entity, but you don't have like the detailed data for one of your remote location. Meanwhile, they are kind of like one of the biggest consumers of like your fuel. They will ask such question. They will ask whether you can give them like a transparency and how the business operation is like works. That kind of like related to the emissions reporting or the sustainability reporting itself. And sampling readiness is really important. They will ask like a random receipt from random date, and if you cannot procure that, that may be becoming like a notes in the verificator opinion, and that will be like kind of like causing you like a problem at the end. And it's also important that verificator kind of like have an access to kind of the detail of your data easily. It will really helps an auditor or a verificator to have like a good organizational mapping and roles to see like who is actually approving the task, where the task is coming from, and they will if they can see also something like the version history or like the audit trail, who is tampering with the data, who is like doing some kind of like manipulation to kind of like close the data gap or something like that. It's really kind of like something that will help an auditor, and they will make the process of verification in your company is like going faster. And some other thing that's also like useful for your internal organization to control expectation upon the verification process is also additional metrics, something like production line metrics, the carbon prices, the supplier analysis, the energy intensity, and the financial integration. This will really help you to kind of like prepare for the verification, because you will already be able to see if there is something wrong with your data. For example, if you have like a peak emission in some month that does not align with the production peak in certain months. So for example, you have a production output peak in June, but your emission is kind of like peaks out in September, and your energy kind of peaks out maybe in October or in August. So if you can see like all of this kind of like data discrepancy, it will really helps out the verification process, because you already be able to prepare, oh, something wrong with my data, so I will be able to kind of like take care of it before the financial year kind of like ending. And I guess this is what comes to a conclusion that with one system that collecting and also validating the data, it will be really helps when you need to kind of like adhere to so many compliances out there. For example, if you are in Southeast Asia, maybe you have to follow IFRS. Then on top of that, you have to follow your national regulation about like carbon that may be the same as IFRS or maybe not the same as IFRS. And if you are kind of like an iron and steel company, you have to do maybe like the CBAM, the CSRD, because you are exporting to the EU. There's a lot of kind of like compliance that you have to follow. And if you don't have kind of like the system that supports this kind of like multiple reporting with one single data output, it will be a headache. Maybe you will spend 6 months or 9 months of your time just kind of like trying to fulfill all of the reporting and not even like trying to be better within your sustainability report as well. And it's just like an accounting and sustainability reporting and sustainability accounting and GHG accounting. You don't need to redo the books every time and asking someone for a report. If you can, maybe like if there's like in Zeroe, we help kind of like company to producing multiple report by one single data input, and that's what I think. That's what Farouk, our CEO, will kind of like explain to you next.
Yeah, you want to put your screen down, Cecep? Then I can take over? Perfect. Lauren, do you have anything, or am I transitioning in? Yeah? Okay. Hi. I hope what Lauren and Cecep have shared thus far you found useful. A lot of these webinars are us talking and presenting concepts and showing slides, and we thought we'd do something a little bit different today, to put context around what we've built, to put context around one system, infinite reports, and the focus on data. We're going to take you through a bit of a high-level demo of the architecture of our platform. Before I kind of dive in, I kind of want to just differentiate like what makes us different than most tools that you possibly have seen in this space, if this is something that you've been evaluating or if you already have a tool in place. When we started building Zeroe, we didn't set out to solve for the report. We built Zeroe to solve for the data. We saw a lot of platforms and a lot of approaches within sustainability where, well, someone needs to make a report, so let me help them make a report. And what we found when we looked at these systems and we looked at the process and the work that sustainability teams were doing, and that sustainability teams that we interacted with were facing, was the system would help them make a report, but all of the work that needed to happen to get to that report was happening outside of the system. They were chasing data, they were asking for information, email templates were being exchanged, data was being manipulated in Excel sheets. And once those Excel sheets were received, they had to be consolidated, and then they were uploaded into a platform. And then the platform would output a report. And we looked at this problem and said, well, all of that other work that needs to be happening in a tool, in a system, so it's verifiable, so it's traceable, so it's auditable, and so it actually solves the pain points of sustainability teams. So in this short demo, I'm not going to go into, I would say, 70 to 80% of the functionality within some of these modules. I'm going to take you through a very high-level demo of how we map out an organization and connect it to multiple reporting frameworks, how we configure data points across different entities in a business, how we create tasks and distribute and manage tasks. Conceptually, I'll show you one example of how data can be ingested, and I'll explain the other multiple pathways that we use. And if this is of interest, we'd be happy to take you through a more detailed approach of this. And then I'll show you about how reporting is generated from the same unified foundation for multiple reports. And then obviously, if there's probably a lot more to show, but you can always get in touch with us and we can take you deeper and talk more specifically about specific use cases. Let me share my screen and make sure I share the right one of my 20 windows that I've realized are now open. Great. Perfect. So as a starting point in Zeroe, what I'm going to show you is how we actually kick off a process and how we work with an organization and how an organization sets up Zeroe to serve them. One of the first steps that they go through is mapping out their organization, right? In order to prepare any set of reports, in order to determine what to measure, you need to figure out what's in, what's out, what it is, where it is, and how you should govern it, okay? And what you can see here is a simple sample demo organization. It's called the Really Big Holding Company. It's a UAE-based holding company with subsidiaries in the US, a head office in the UAE, subsidiaries in Indonesia, a plant in the United Arab Emirates, a building in the Philippines, a building in Qatar, a head office in Oman, a plant in China, and a warehouse in Singapore, as an example. And you can see that there's multiple layers to this organization, right? They may have, within a North American operations hubs, they have a plant in Virginia, Georgia, and California. And within the Indonesia hub, they have another plant in Indonesia, in Bandung, as an example. Now, the way Zeroe has been set up is for you to be able to deal with complex, multi-layered enterprises that span different industries in different countries, but also one organization with many different locations in one country, as an example. We've worked with organizations that have over 180 different entities mapped out within Zeroe, from which they are actually collecting data and producing GHG emissions calculations and sustainability reports for. So this is really built to scale. Now, the first thing we do when we work within our software is we collect relevant data from these entities. And an example would be, if we look at our holding company here, we've gone and collected that it's in the United Arab Emirates, it's based in the Burj Khalifa, it's a private company or it's a public company, the number of employees that are part of that organization, the revenue band which it fits in, its financial reporting period, its baseline year, its industry, and then we've selected the reporting standards that may be applicable within this organization. And within these reporting standards that we're selecting that are applicable, we can dive into a significant amount of detail as to which subtopics or that need to be collected for each of these. And I'm going to take you deeper in this. So we can support, in this demo instance, we've activated GRI, GHG protocol, and IFRS, but we could be activating any number of reporting frameworks and standards depending upon the organization that we're working with's needs. Now, we're also able to look at this from a view of a map of an organization. We're able to collect relevant data for any particular entity. So we can collect and map to the cost structure of an organization, the cost centers to each of these entities. We can map meter numbers, we can map water meter numbers, and that allows for information to automatically be allocated to each of these entities as it flows into our software. What we're really doing when we're mapping out an organization is we're setting the governance framework. This governance framework will determine which emissions factors get used for different entities. It'll impact which perhaps reporting frameworks and standards are turned on or turned off based upon requirements in a particular region. And it really kind of sets up the software to do the work for you as you start using it. You can add entities, you can deactivate entities, which allows you to change your boundaries as your organization evolves through acquisition or divestiture or whatever that may be. Now, the second step that happens within the software is for us to actually identify the data that will be collected for each of these entities. Now, we can set this up for, based upon the reporting subtopics that you have selected, you automatically spawn off data points for any particular entity. But in the case of this demo, we've only selected certain data points that are being reported for each of these entities. So you can see the number of data points that are being reported to meet these reporting frameworks or select components of these reporting frameworks. And what I'm going to take you through now is I'm going to show you how we actually configure data points within the software. So one of the things that you can do is you can select on a particular entity here, and let's take perhaps these two entities here, and we're going to configure the data points that are going to be collected for these two entities. Now you'll see that there are already data points that have been pre-configured here. We're collecting for these entities at the moment, we're collecting mobile combustion for the North American Operations Hub and the UAE head office. We're collecting purchase goods and services and business travel and waste generated from operations. And for each of these data points, we determine whether it's a nominal data point, whether it's a narrative data point, the frequency of collection of those data points that could be changed from monthly to annual, the calculation methodology, the collection method, the period, and the status of whether that data point is active. And for any organization, you can add data points to collect. So as an example, we have a library of setup data points. Let's assume I want to collect biodiversity data for GRI 101 for each of these two entities. I could automatically add that data point, and automatically those data points are added here, okay? We also support the ability to add custom data points. And this is unique because what we realize is while reporting standards and frameworks set certain data points that they want you to collect in order to meet their requirements, a lot of organizations have data that they want to collect from their operations that might not be reported, but they still want collected. So within here, you can create a custom data point. And that custom data point, you can say would be, man hours without injury as an example. Because maybe that's something that you're collecting separately. So you can actually set up man hours without injury. I've typed this before, so it comes up. It's a nominal data point. I want to collect this on an annual basis. I want that to roll into my GRI social reporting standards. And I want to add fields of what data I want to collect. So we allow kind of complete, essentially modularity to actually capture the information that you want as an organization in the format that you want. So let's say I wanted to collect a table from these two companies, and that table that I wanted to collect was type of man hours. And against that, I wanted that to be a drop-down menu, and I wanted it to be engineering or office work. I know this is not a great example. I'm kind of thinking about this on the fly, but let's go and say I save those two. So that's a drop-down. So someone's going to get a drop-down to choose the type of man hours. Then they're going to actually go and say the number of hours. So that needs to be a number. Now, what has happened is I've actually created a data point, and that data point will be man hours without injury that will be generated to collect information for these two entities. And I have selected an annual frequency. I can select the period that I want to collect that data for. So I want to start collecting it in 2025. And I want that to flow into my system. And I program that up and I can activate it. And I have to activate these two quickly. Hold on. Annual collection method, manual, here, starting period 2025, calculation, and I can activate those data points. And by activating these data points, I'm now generating the demand for data to be captured at this frequency, at this interval for a particular organization, right? For a particular entity that has been mapped out in our software. So you can see that what we've been able to do is we've been able to create a system where you could map out your organization, understand what you want to collect, determine what you want to collect from where, right? And set up any number. So you may have, for example, collecting biodiversity only from your subsidiaries, but you don't want to be collecting it from every entity. But you might want to collect purchased energy in your buildings. You want to collect purchased energy from your head office. But your warehouse, you want to be collecting purchased goods and services because that's where your purchasing department is. So you can set up different data points to be collected from different entities within your organization, thereby essentially distributing the work to the parts of the organization that are relevant to provide the data that you need to meet your reporting requirements. And this is fully self-service. One element that I haven't shown here just to note is the ability to create custom calculations, which is something that you can, explore with us deeper on a demo, where we can actually, you can set up your own calculation methodologies. We can go much more deeper into kind of the power of the software and how you're able to self-service and basically build your own approaches to things. Now, the next step that happens is we've ended up spinning off a whole bunch of tasks. So within an organization, based upon the reporting period, the frequency of collection, we generate lots of different tasks. You can see that there are annual tasks generated for 2025. There are monthly tasks for different entities. Each entity is mentioned, each country is mentioned, each data point or task has been created, and different people are responsible, accountable, or assigned to be a validator of those tasks. In this case, you can see very simply, if I zero in, if I was a particular user within an organization that had perhaps data for the UAE head office, and my name was, in this case, Ali Hassan, and I was assigned this task, I would effectively only see my tasks within the organization. So as someone that's given platform to use, and I distribute out work to Ali Hassan, I only see the tasks that are applicable to me within the software. And against the tasks that have been assigned to me, I can easily click on a particular task, and I can complete that task through various different ways. You can see here that you can upload a file, you can manually enter data for electricity bills. We allow you to drag and drop a PDF in, and we automatically extract the data from that. Or we support integrations where with organizations where we've deployed our platform, we've connected into their Oracle data, their fleet management data, and on a monthly basis, that information automatically flows into Zeroe. Now, I'll take a very simple kind of manual data entry task here, and I'll go and say, just to very quickly give you an idea, I want to manually enter this data for mobile combustion for August of 2025 for my World Trade Center entity. I have an Excel sheet here on the side. Let's go and say I can copy and paste that data in, and it automatically shows up, and the right kind of units are mapped out. I can change my fuel source, so I can move that to, for example, diesel, and I can make sure that it shows up as imperial gallons, and then I can submit this data. So if I'm a user and I have data, I can open my Excel sheet and copy and paste it. And as I showed you earlier, when we set up a custom data point, each of these columns can be modified to match whatever columns your business has in its organization, as long as the mandatory columns required for mobile combustion to calculate emissions are included within it. Okay, so you can calculate vehicle name, vehicle plate number, model of vehicle, so you can use all of that information later on when you need to plan out your decarbonization. And then what happens after submitting a task is I've submitted that task and the person accountable receives an email. It says, Farouk, hey, Ali submitted the task. Please take a look at it. You need to review that data. I can come in here and review that data. If we have years of historical data within the system, we're able to then look at that historical data and say, hey, well, the average is off by 30% this month. There might be something wrong. I can reject that data. I can approve that data. If there's supporting documents, I can see those supporting documents that have been uploaded. Once the data has been reviewed, it goes to the person to validate calculations. Let's assume that I accept the calculations in here. What automatically happens here is you can see that calculations have automatically been completed, right? So what you're going to be able to see here is the activity amount, the activity unit, the emissions factor value that has been applied for each different fuel source, and as a result, the resulting emissions. And what we've created within this process is a comprehensive audit trail where you can see in another task that I've opened here, who has done what, when that work was done. You can view the data and you can even see uploaded attachments should attachments have been uploaded. I would normally ask any questions if I was meeting with someone on demo. So I'm not going to get to ask that because it's just me talking. So it's a bit weird. But anyways, I'll continue on. Right. Now, that gives you a bit of an idea of how data is collected within the platform. And if you're a sustainability manager that's collecting data from various different departments in your company, one thing that, I think most sustainability managers know, but maybe the rest of the company doesn't acknowledge, is that you don't actually own any of the data. All that data sits with different parts of the organization. And collecting that data over emails and following up with people isn't easy. And this is a way of us looking at the problem and saying, well, you know what? This data is actually distributed across different parts of the organization. So the best way to help a sustainability team get that information is to create a system where they can very quickly say, well, we had a whole bunch of tasks that needed to get done. They were assigned to the right people within an organization. The status of any one of these tasks I can see at any given period of time. And I can go and dive in to actually see, well, what was done and who did what when. And if I need to follow up with people to get their data, I can very quickly tag them in a task and send them a message and say, Ali, give me your data. You haven't submitted it. He gets a notification and he knows he needs to do it. Removing the need to be messaging in different platforms, removing the need to send emails, and just ensuring that this tool helps you get the information you need to produce the reports that you need. What I will not take you through today is how we're using AI to transform data, how we're using AI to categorize data, how we use our system to pull data via integrations, because that would take too long. But I'm going to quickly now skip or how we're able to show charts and how we're able to analyze the data that's being captured across an organization. What I'm going to quickly skip over to now for the sake of time is showing you how all of this data then can be collated into a single report or multiple reports, depending upon what your requirements are. So based upon your reporting requirements, we have a reporting dashboard that gives you a bit of an overview, allows you to see the different reporting standards that are being tailored for here. We add reporting standards based upon customers that require it. We activate ones, we deactivate ones. We're very flexible in that manner, and it all comes included in whatever service we provide. We don't charge for more reporting frameworks. We don't charge for more data points. It's the platform. We don't charge for users. We charge for the module and the size of the organization that we're working with, and the rest is all, accessible to you. When we go to kind of managing reports, and I'll just kind of open a sample report here to give you a bit of an idea. Let's go and I have demo report 2 here. And demo report 2 has GRI, GHG, and IFRS reporting requirements. and there's still pending data because I'm in the middle of a year here. But what you can quickly see here is if we kind of scroll down to kind of GHG protocol, and let's take mobile combustion. So if we take mobile combustion, what we can see is that 10 of 36 tasks have been approved. So we actually have data pending here, right? There's 26 different tasks that haven't been completed this year that need to be actually completed in order to actually complete my mobile combustion calculations for the year, but I have 10 that are approved. And I can dive into what is inside this task and the data that's been submitted for that particular task. I can go to that task and I can actually say, hey, I'm missing this data, I need to get it. And all of this information gets collated and summed up here within mobile combustion. You can do this, and you can see that, for example, mobile combustion is being used for GHG protocol, as well as IFRS, as well as GRI, because it matches all of them. The same thing happens when we're dealing with kind of non-numbers or narrative tasks, as we call them. Within narrative tasks, for example, for GRI and biodiversity, you've got, what were your organization's policies or commitments to halt biodiversity loss? In this case, I had 4 tasks that needed to be completed. I have 2 approved tasks. I can see the text that's been contributed here, and I can then generate a summarized text here for those 2 entities. I hope this kind of gives you an idea of how things come together in the platform. As you can kind of see, what we've focused on as we've kind of built this out is we focused on building a tool that supports organizations map out their organization, identify what data they need to collect that data from different parts of an organization, and have clear workflows of that information transferring through the platform all the way to reporting, so they can produce the report that they need to for whoever they need to produce it, whenever they need to produce it. And they can look at it halfway through the year, at the end of the year, at any given point across the process. I think that was my kind of goal of kind of giving you a bit of a picture. Obviously, if this is interesting, if you see this kind of applying to your type of organization, we're happy to take you through much more comprehensive, tailored demo of something like this.
Farouk, just very quickly, there's one question that's come through, and all the other questions, thank you very much for submitting. We will get back to you. Let's just pick out one for the sake of time. The one is, with ESG and emissions reporting frameworks continuously evolving, how does your team ensure to keep up with these standards, and how are they implemented in the Zeroe solution?
So I think, one of the benefits of having a platform that's catering to many organizations is you aren't the only one who's reporting to a particular framework using our software. So as part of our platform and our service and our annual subscription fee, we review those frameworks and standards annually because we have many customers using them, and we are updating those frameworks and standards. And the system is providing you transparency that those frameworks and standards have been updated and that there might be changes in reporting requirements, right? But you also have the complete flexibility to adjust what you produce for yourselves. So for example, what I've shown you here is, GRI, IFRS, GHG. But we have organizations that we work with where they have a private equity fund invested in. And in their private equity fund that's invested in them, they have specific reporting requirements that they call the director's report. And they produce that director's report themselves within the software because they created a reporting framework called the director's report. And it overlaps with other data points, but it's got its own standard within the software.
Perfect, amazing.
I got one more question I think it's worth asking. Where do you store data per corporate entity, cloud-based or custom data center? So I think that's worth answering because there's a lot of questions around kind of data security and data sovereignty. So we're able to cater to data sovereignty requirements in numerous different markets across the GCC today. So we can deal with data sovereignty in the UAE, in Saudi Arabia. We have deployed to customers on their private cloud. So we have not deployed it on premise. This is something that we can do, but we've deployed on private cloud for customers. So our software sits on their private cloud. Obviously that comes with additional complexities to do. But we currently use public cloud in the UAE for the majority of our organizations, but we also provide access in Singapore for organizations that need APAC coverage.
Perfect. Well, thank you so much for everyone for joining us. It's been a pleasure, and I hope you find it of major value. We will be continuing to find topics to chat about every couple of weeks. So if you've got any suggestions and big questions, and please feel free to contact us. Until next time, have a great day.
Thank you.